So we're going to start off this YouTube video and we're going to get deep in conversation about trading, right? You put a lot of work into your trading. You know that your strategy works. And I know everybody feels like my strategy is the best strategy. And that's okay. If it works for you, that's awesome. But let's check this out. We're going to start off with the 5 P's of trading that you should pay attention to. And one of the first P's I want to talk about is planning. When you plan a trade, you have to see what direction that trade is going in. What is the most probable direction of taking that trade, right? So if you don't have probability on your side, then that's not a plan that you should take. So already there you have 2 P's, right? You have probability and you have plan. So you have to plan according to probability, right? So when you plan according to probability, you have to see where the most pressure is. Is there more pressure to the upside or the downside? Is the pressure selling pressure or buying pressure? Those are the 2 pressures that you need to pay attention to. So now when you do a multi-frame analysis, you can see we have pressure on the month. We have pressure on the week. We have pressure on the day. Which direction is there more pressure to? So we have plan and we have pressure. The third one I want to know before I get into a trade is probability, right? That's your third P. We went over that just now. So which is more probable? Is there room for this stock to move to that probable side where there's pressure, and I'm going to plan to the side of that pressure? When we predict what's going to happen in a stock, our egos a lot of the time get in the way, right? So now, because of that ego, you can no longer focus on what is happening in front of you because your ego is saying, I'm right. I'm right. The market's wrong and I'm right. And when you start thinking that you're smarter than the market, that's when you start getting into trouble. You see, most people lose their P&L in the transition from bullish to bearish because they can't recognize when something's changing, right? Now, today we had a sell-off in SPY. But before we get into that, I want to go over the next P. The plan, the prediction. The 4th P I want to talk about is price action. So now you have plan. Number 2, you have pressure. Number 3, you have your prediction. And number 4, you have price action. So what happens when you have the plan, the pressure, the prediction? Now you need to know the price action because the price action is going to let you know when to enter the trade. If you don't have entries and exits and you're playing levels, that's okay. You can play levels, but just know that you need a systematic way of trading. I'm not saying my strategy is the best. I'm saying that you need a system to the way that you trade because there's no hoping and there's no ego in trading. All right. So now we're going to get into the last P. You have the plan, you have the pressure, you have the prediction, you have the price action. The last one is P&L. Did your P&L go up? It doesn't matter if you're right, wrong. Did your P&L go up? And we don't measure P&L trade by trade, day by day. You got to look at your journal. You got to look at your P&L statement at the end of the month. Did my P&L go up? Because if that doesn't go up, then everything else doesn't matter. Everything else doesn't matter. Okay? So let's get our egos out the window. Let's plan our trades. Let's see where the pressure is, right? And let's make sure that our P&L is going up. At the end of the day, we're all here to make money. and you need to make sure that your P&L is going up along with your analysis and your ego, right? You need that P&L to go up so you can scratch your back and say, yeah, I got that ego, right? So if you don't have a P&L to represent your ego, your prediction, your price, the pressure, then you got nothing, right? Now, let's get into the SPY. I'm going to break it down. Today we had a major sell-off. Let's see exactly what's going on in the SPY. So right here, I'm going to have a chart that is completely empty, right? This is a completely empty chart. And I want you to notice a few things about this chart. Number one, what makes a stock bullish? What makes a stock bullish is the fact that we're over the 50-period moving average, right? What gives you more confidence that the stock is bullish? Well, we're over the 50-period moving average and it's trending up. The moving averages are in the right order, right? We have the 9 on top, followed by the 21, followed by the 50-period moving average. When these moving averages are all facing the right way, that is a bullish stock. So considering the SPY right now, we are bullish. Despite the fact that we had this major sell-off today, SPY is still bullish. Now, I'm not going to tell you that if we go down to the hour chart, you might say differently, right? But just know that when you're trading in the hour, you're still going up against this buying pressure here, right? So if you saw this bullish action and then you had this one day right here, which is Wednesday, January 18th, right? You see this bearish candle that sold off from 398 all the way down to 389. That's about a $9 move, right? Then we had another bearish day here, and then we had a 386 all the way up to 395, let's say, right? So that's another $9 move. So what does that mean? That means that everybody who thought that this was bearish here, right, said, oh, we failed to make higher highs. We're bearish now because of this sell-off here. Now, they missed out on all of this price action because they were stuck being bearish down here. That just messed with your whole mental on what you're looking at in the SPY, right? Because you thought that because of one candle, we were bearish, right? Now, today, we have one bearish candle, right? Does that mean that SPY is bearish? Maybe, but maybe not. But guess what? Right now, this price action is telling me that we hit a little bit of a resistance up here. We have this pullback to the 21 moving average, and we have one day of selling, right? Compared to 2 previous days of consolidation and no direction, and then 2 days of buying, right? So that's 2 days of buying, 2 days of neutral, and 1 day of selling. So let's do the math here. 2 days of buying, 2 days of neutral, and 1 day of selling, right? So tomorrow we need to see if we're going to have follow through to the downside or if we're going to have follow through to the upside, right? For that to happen, SPY needs to hold this 21 moving average on the daily chart, right? So now if we go down to the hour chart and we start doing some analysis here, what do you see? You see this uptrend, sideways action, a breakout, and then come back into this sideways action. I'm going to draw this out for you real fast, right? We have this uptrend. We start from the bottom. We go on our way up right here, right? The break is right here. So I'm going to draw a box, right? I'm going to draw a box over here from the top of this range to the bottom. Boom. Right here. Now, normally when we break out of the range and we come back in, that's considered a false breakout, right? That's considered a false breakout. If we go back into the daily chart, we can see that this is the range. We broke out, we failed to hold, and we came back down. So what does that mean? That means that if tomorrow we cross below today's price action, which is this 413 level, which also happens to be this 21 period moving average, we can see downside to the next resistance, which happens to be the bottom of this range, right? So now let's get into some patterns, right? Because people say that patterns don't work or whatever the case may be. But let's get into some patterns here, right? So you have a pennant here. We broke out. Is it possible that we can come back down, retest this line, and then go back up, right? But forget about the pattern. Let's just go strictly based off of price action, right? Let's go strictly based off of price action. So right here, this is a daily chart, right? And we see that SPY failed to hold above of this range. Now let's go into the weekly chart, because the bigger you go in time frames, the more powerful the price action is, right? So now we see that we have 1, 2, 3, 4, 5 weeks of buying, then 2 weeks of pullback, right? Now we have 1 week breaking out of this consolidation, and now we have this week that's completely inside of the previous week. So that's more consolidation. What does that mean? That means that by Friday, if we do not cross the previous week's low of 410, then we can consider on a weekly chart that we are still bullish. Why? You have the 50 period, the 21 period, and the 9 period moving average still in a bullish direction. This is what the moving averages are for. Use them. Okay? So now we have the daily period moving averages here, right? The weekly, now the daily. The dailies are also in the right direction, right? So have we seen that we are bearish? Not yet. Now, if you go off of price analysis, you can say, okay, we're uptrending. So now it's logical for us to see the bottom of this trend, right? So if I go here and I draw a parallel channel, and I draw a channel like this, then it's logical for you to say, okay, we're at the top here and we're going to retrace all the way to the bottom here. I'm not knocking that. That's fine and dandy. But until it crosses over here and we get under the 50 period moving average on the daily, I can't be bearish on this. You understand? Now, if I'm day trading and I'm looking at this hour by hour, now I can say, okay, I'm bearish on the hour. You understand? And know that if you're bearish on the hour and this is trending up and the daily's bullish, when you take these plays to the downside, you cannot expect this to go down with the amount of pressure as if we were in a downtrending market. This market is trending up. As choppy as it might be, as ugly as the price action might be, this market is trending up. This is why these are called trend lines, because it is trending up. Trending, keyword, trending, right? It is trending up. So you can take some puts here to the downside, right? But just know that you're fighting this bullish action here, right? This bullish action here. This is a monthly chart, right? So now, if you look at this monthly chart, you can see that there is a bullish price action here, right? You can say, I'm going to use a Fibonacci retracement. I'm going to go from the bottom all the way to the top of this move, right? And right here is what they call a golden pocket. And right now we're holding the 50 the 50% of retracement, and now we're starting to go up. And once we get above this 2-3, then we're super bullish, right? Or you can say, oh, this is a bull flag and we're starting to go up. It doesn't matter. The point is that the SPY is trending up, and if we start to go down and we start seeing this weekly candle break down from this bullish price action, then we know that we are short-term bearish. Short-term. But the bigger picture is going up. So what does that mean? That you have to have both sides of the market planned out. And you have to know that if you're fighting against an uptrending market, you have to take risk according to that bearish pressure in a bull run, right? So you have to understand the entire market before you get into a trade. So right now we're going to go down to the hour chart. And because we came back inside of this range right here, right? We're barely holding on to this price action here. And if we fall back under this 413 level, we can see it move all the way back down to this 410 level, right? So the plan for SPY for tomorrow, if we open right around here, come back, retest yesterday's low, which is today, and then we see bulls come in at the bottom of this level, then you can say, okay, bulls are still here. Bulls still want it, right? Now, if we see the price come down below this 413 level, 413.50, we can see 410. So when you trade that, expect that 410 move to happen over the next week if we break this level, right? If we break below the level and we come back above, then you take your stop loss like a big boy and you put the stop loss as an expense of trading, because people think that because they trade, they're never going to be wrong, right? If we go over some of the stock symbols, right, like SHOP, right? We were in SHOP yesterday. I said I like the price action, right? You had this bull flag here. If we go to the daily chart, you can see that this stock is in bullish order, right? It's trending up. So because it's trending up and the price action is telling me that it's bullish and the moving averages is telling me that it's bullish, this is a good play to take because we had a push up, we had a retracement, and now we still have room until the next resistance. But today, we happen to get a sell-off. It happens. It's part of trading. If you don't know that this is part of trading, then maybe you should not be a trader, right? Understanding market conditions change the way that you trade. And if you cannot recognize that, then you have to start doing homework. You have to start journaling. You have to know your entries and exits. You need to define them, and you need to be able to trade systematically. These are the P's of trading. And I think that if you stick to these P's, you can become a better trader simply by having a plan, knowing the pressure, knowing the price action, and making sure that your P&L goes up. All right, guys. So I had to go a little in on this video, and I hope you guys continue to trade well. I hope you continue to watch these videos. If you like it, if you feel like it might help somebody, share it, because you know it definitely helps me in this channel. I want to continue to provide value, and if you have any comments, feel free, because that's what the comment section is for. I appreciate you guys, and until next time.